Markets open up to a plunge this morning, only to be bought rapidly back up. Is this dead cat bounce? Still got a lot more bounce left in it. Find out in today's exciting episode of Breaking Bitcoin.
I'm Samson Mo from Blockstream, and you're watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin, broadcasting to you live out of the underground Cracking Cryptocurrency bunker. We are live every afternoon at 12 p.m. Central Standard Time, your afternoon source for everything markets and finance. Hopefully you guys are doing absolutely fantastic. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. If you guys are looking to develop a verifiable systems approach to your trading strategy, join our community. Take advantage of our signals and trade setups, premium indicator suite, pathways to profit strategy building course, community mentoring, and much more. Sign up today for the premium trading group at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. We've got a fantastic show for you guys today. Happy 420, everybody. Now, markets performed pretty well moving into Friday last week for traditionals, and I would hypothesize that a lot of that had to do with news that Gilead's remdesivir, the drug that was originally designed to treat Ebola patients, was showing even more promise for helping those infected with COVID-19 recover than had been previously assumed. A Chicago trial was published in Stat, where 125 individuals with severe COVID symptoms were run through 2 phase 3 clinical trials. As I said, that was mentioned in the Stat article. The majority of patients recovered with only 2 deaths. However, due to a lack of a control group, there's been no control groups for any of these tests. We can't make any final conclusions from this. We don't really have any more data. Otherwise, then this is a hopeful thing. And of course, the markets run on the emotions and the sentiments of speculators. So take that as it will. Total confirmed cases as we are moving into our Monday update stand at 2.416 million as of this morning, with total deaths at about 165.9 thousand. What is positive to see is the rate of daily cases does appear to be diminishing, with 99.1 thousand on the 12th not being surpassed since then. We have seen not a dramatic faltering of the curve or a falling off of the curve, but a decrease. We have not seen a higher high yet on total reported cases intraday. The issue is that with numbers, of course, the argument that as new daily cases diminish, we don't know if that is the result. Of course, it must be the result of social distancing and the lockdown affecting the curve as it was supposed to. As ending the lockdown and allowing individuals to return to work is the most contentious economic issue and social issue of our modern time, pointing to reduced stats really only reignites that argument and doesn't really give us any kind of clear data to go off as far as decision making. Now, one thing I do want to point out, though, as we're talking about this, although we do not have the best statistics on COVID deaths, we still do have statistics. For example, we know that reporting of deaths is incorrect. We know that reporting of those infected is incorrect. We know the numerator and the denominator is wrong when it comes to case fatality rates. But what we do have to accept and understand is that we're not going to get the most accurate statistics, right? We have this exact same issue with reporting flu-like deaths and flu-like symptoms, right? At the end of the day, we have a confidence band around the numbers that we have. And we are going to have to make decisions, at least our policymakers are going to have to make decisions based off of that data. And that's just something that we have to accept. We're not going to know the absolute finite best number, right? It's not going to happen. And as I said, governments and policymakers are going to be making decisions based off of those statistics and the numbers that we have. And they're not irrelevant, right? If we have a band of confidence that the death rate is between, let's say, 3.6 and 5.2, we can notice an increase or a decrease that is significant in that average, right? Another thing that I want to just mention here is that, I get this phrase from Andrew Klavan, which is SGOT, some guy on Twitter, right? Some guy on Twitter doesn't have the best statistics, right? So when it comes to this kind of stuff, and this is as somebody who's on YouTube talking about it, I'm not a doctor. I just watch the news. I compile the data. I compile the facts, and I attempt to make decisions based on that, on where I think the market's going to go. When it comes to traditional markets and investing anyways, when it comes to cryptocurrency and FOREX, just straight technicals. Some guy on Twitter that you're following doesn't have the best statistics, right? Some guy on Reddit, some guy on YouTube doesn't have the best numbers, doesn't have the best statistics. So anybody telling you right now that they know for sure how this thing is going to play out, or they know for sure what's wrong with the numbers or what's wrong with the data, I think that's extremely arrogant. So be very cautious of that, because as I said, like it or not, right? Like whether you agree, like, you know, regardless of how decentralized and anarchistic you are, as I tend to be, at the end of the day, the decisions that policymakers and governments make do affect your life, and they do have access to better data than you do, right? Some guy, some conspiracy theorist on Twitter posting how everything is going to go down, regardless of whether he may be correct or not, as far as thematics go, or maybe long terms, he doesn't have access to the best data. He doesn't have access to the best data, right? Some guy on Twitter does not have access to the best data, right? The people that we tend to throw a lot of mud at actually have access to the best data, frustratingly. President Trump has released his Opening America Again website and criteria. I don't know what the again is about. Like we were never shut down before. This is like the first in my lifetime, I think, like kind of ever, the first like nationwide lockdown. But he published this Opening America Again website and criteria, the associated website. Now, it is currently, I heard a lot about this, right? This is currently guidance, right? You know, as soon as this thing came out, it was like, listen, man, here's the NWO plot for the world, right? Listen, it's guidance, right? That means that it can, emphasis on the can, be implemented on a statewide or county by county basis at governor's discretion, respecting the state's rights in this. It's not a mandate. It aims to see a decreased trajectory of ILI, which is influenza-like illnesses, for 2 weeks, as well as a downwards trajectory of COVID-like symptoms over a 2-week span before moving on to further phases in this kind of rollout. We'll go over that here in just a second. Facebook's Libra project, there was a pretty scathing Financial Times article that came out. So I don't know if you guys read this. Now, we covered this like quite a while ago, actually like a month or so ago, how the writing was on the wall and how Facebook had to walk down its project. So we've been at the forefront of covering Libra. But this Financial Times article came out on Friday, I believe, maybe it was Saturday, about how, you know, Facebook had this great idea to be the next Bitcoin, but now it's just nothing much more than Venmo, which is correct, right? So Facebook, they haven't updated their website, but the Libra project has taken a significant downgrade. They no longer hold to the dream of being a global currency independent of any local currency, right? The new Libra is just going to be a local currency tied to your Facebook account. Now, that is still pretty big, but it's nowhere near what we thought it was going to be, right? So if you're a UK user, it'll be tied to the British pound. If you're a United States user, it'll be tied to the US dollar, and it's just a convenient Venmo system of exchanging currency and funds. You could still build a whole lot off of that. It's kind of their first step, but I assume they're basically at the level where pretty much anything we can do to get this thing passed, so we don't have to get all problematic. Anyways, with that being said, we've got a lot to cover. If you guys have any questions, put them in the live chat. The moderators will direct my attention to them. We'll do the Q&A section at the end. If you guys are watching on YouTube, make sure to smash the like button and subscribe. Lets us know that you enjoy the content, and make sure to check us out on Twitter and Instagram, where we do post exclusive content you will not see anywhere else, not even here on the YouTubes. Yes, that is correct. All right. And with that being said, we're going to get right into the news. The first story of the day is going to be, let's get this all set up and let's go. Boom. There we go. Scene switching and stuff. All right. So our first story of the day is going to be, what have you guys heard about this? Pretty massive DeFi hacks over the weekend, right? So a major exploit took place on the DeFi lending platform dForce over the weekend, and it drained over $25 million in Ethereum and other Bitcoin-pegged assets from the protocol's liquidity pool. And this is just yet another major incident in Ethereum's DeFi ecosystem. On April 19th, the Chinese lending platform lendf.me, that's part of dForce's network, saw hackers steal nearly all of the funds contained on that platform. Linked right here. Now, writing in a Medium blog post, Mindao Yang, who is the founder and chief executive at the dForce Foundation, confirmed the details of the exploit that up until this point were pretty much just scattered about on Twitter. Now, interestingly enough, Yang says the hackers have recently expressed a desire to negotiate, and that dForce is going to be entering into a discussion with them to hopefully reach an agreement to recover funds. So this is kind of more of a, we see this a lot, right, with ransomware attacks, right? So this is kind of like an exchange hack / turned pseudo ransomware attack, right? Now, according to a report by Slowmist published here on Medium, several cryptocurrencies, including multiple stablecoins, were stolen, including this is from LendMeF, including the following: WF 55,159 coins, WBTC 9 coins, Chai 77,000, HBTC 320, HUSD 432,000, BUSD 480,000, 587,000 PAX, 459,000 True USD, 698,000 USDC, and 7.18 million Tether. Also some IMBTC and USDX in there as well. So the majority of stablecoins, right? The majority of stablecoins. So this really is, straight up, if you are just looking to kind of like dip in and dip out, obviously as a hacker, large sums of stable coins, currencies that are pretty stable, you know exactly how much you're getting. And these things, these large kind of decentralized holdings that are not very secure of stable coins are obviously going to be a huge honeypot. We've covered these before. I mean, these huge third-party honeypots are just very dangerous. Since Saturday night's hack, the DeForce Foundation has temporarily suspended its protocols, LendMeF and USDX, along with they've also taken their website offline. Now, the lendf.me site, it's a decentralized money matching protocol, pretty popular in the Chinese market, and it utilizes smart contracts to enable easy borrowing. If you're a borrower or you're a lender, borrowers and lenders can deposit and withdraw the stable currency of lendf.me USDX at any time, subject to liquidity, and users can lend USDX to earn yields. Now, DeFi Pulse, which is an analytics and rankings platform for decentralized finance protocols, we've gone over this before, shows how assets being tracked on the DeForce network plunged heavily 100% after the attack. I mean, you could just see the total value locked up on DeForce, like rising, hacked, it's all gone, baby. Wiping out all of the holdings contained on that network in one fell swoop. Now, as for what was behind the exploit that robbed the DeForce protocol blind, we do have an analysis from the team over at the decentralized exchange token Ion. Now, in this article, I think it's this one. Let me check. Yeah, it's right here. So in this article, the token Ion team claims that it's identified that the exploit is having taken advantage of a known vulnerability in a smart contract that links ERC 777 tokens and the Uniswap/lendf.me contracts. Okay. Now, Slow Mist also reported on the hackers' movements following the successful deployment of the attack, with the majority of the assets that the majority of the assets have been moved onto other decentralized exchanges and have since been converted into ETH. As for what comes next, going back to Yang from DeForce, he said that they're doing everything in their power to contain the situation. They've contacted law enforcement in several jurisdictions. They've reached out to the issuers of the assets themselves and exchanges to track down and blacklist the hackers' addresses, and they've engaged their legal teams. But of course, this is the blockchain, so good luck with that. DeForce is one of China's largest decentralized finance platforms for lending fiat-backed stablecoins. Just last week, the platform raised $1.5 million in funding from Multicoin Capital, Wobi Capital, and CMB International. So this is not like some small way by side gas station of an exchange. This is a huge deal. There appears to be hope, however, that investigators might be able to catch up with the hacker. We have seen skill in this done. It does appear that the executor of the actual attackers here weren't actually very. Obviously, they were able to exploit the protocol, but it doesn't seem like they were very good when it comes to cybersecurity per se. Maybe they were good at exploiting smart contracts, but not necessarily covering their trails, because it seems like they did leave a pretty significant trail of breadcrumbs for a cybersecurity expert to be able to track them down. Now, shortly after the exploit was completed, an interesting exchange of on-chain messages took place. The hacker sent 3 transactions. This is what I'm talking about. The hacker sent 3 transactions of PAX tokens, which was about $250,000 to the Lynch exchange, Paraswap, and an account identified as lendf.me admin. And this is pointed to as a symbolic gesture, as Pax means peace in Latin, and it appears that the hacker may be waving the white flag and looking to make peace, or looking to open up maybe negotiations on this ransomware attack. Or it's entirely possible that he just exploited the system to prove that he could, and he wants to give the funds back. That would be pretty rare, but those things have happened before, right? We have had a lot of white hat breaches of exchanges with returned funds, not actually hacked funds. Those usually don't make the news, like, because this is more of a like, oh, what's going to happen? Dude stole stuff. Now, DForce did respond with an on-chain message to the hacker that included an email address for the attacker to contact, and later signaled it had replied to the hacker's inquiry. As soon after that, the hacker appears to have returned the Huobi issued assets to lendf.me. That was about $2.6 million. DForce finally sent one message with a mildly threatening tone saying, "Contact us for your better future." Now listen here. Listen here, hacker. Cute. But don't let us, we'll sick Arthur Hayes on you. Okay? Now, according to a spokesperson from the decentralized exchange, lynch.exchange, which was one of the dexes used by the attacker to trade some of his ill-gotten cryptocurrency. Let's see here. Here it is. From Cointelegraph, the spokesperson explained to Cointelegraph that the cybercriminal leaked important metadata about himself by directly using its web-based content delivery network instead of the IPFS-based front end. Specifically, all three exchange requests came from a single Chinese IP address, which suggests that the hacker did not use a decentralized network like Tor. The exchange's spokesperson theorized that this is a VPN or a proxy server, which may be liable to subpoenas, meaning that because he did not actually utilize Tor, although you could track the back end and the front end much more difficultly though, because he just used a regular VPN, the VPN can be subpoenaed and we can actually go in and grab his IP address and find out who he is. Now, the hacker is also known to have been using a Mac, revealing his screen's resolution and system language, which was set to EN-US. Now, although this data is trivial to obfuscate, the high amount of uncommon details in this metadata suggested to the investigators over at 1inch that it was simply an oversight. They concluded that he seems to be a good programmer, but an inexperienced hacker, which kind of leads with my bias earlier that from the data that we have, it seems, again, as I said, this is somebody who was pretty good at exploiting smart contracts, but not necessarily somebody who was a cyber criminal as a state of course. Otherwise, he wouldn't leave this metadata. Now, police investigations are already underway. According to 1inch, it appears likely that the hacker will be forced to return the money in hopes of lenient treatment if they are able to catch them. And from the data that we have, it seems to suggest that he will be caught. The weekend hack does, however, follow another DeFi exploit that happened earlier in April. That was when BISC, that's a decentralized exchange that enables users to trade anonymously, revealed that hackers had uncovered a critical security vulnerability that allowed them to steal $250,000 in Bitcoin and Monero from their platform. And this also follows the story that we covered just last week, and that is the class action lawsuit filed against MakerDAO. And we discussed how these DeFi protocols are still experimental, and investors should be very familiar with the risk of locking up funds on these platforms before they start considering this really a realistic alternative to traditional investing, right? Again, this is as somebody who's been fairly critical of Ethereum in the past, and this is as somebody who's, obviously very, very pro decentralization and innovation. But at the same time, it is very difficult for me to they say in the world that if you want something done, you got to do it yourself. And as much as I do believe that platforms like decentralized exchanges and decentralized finance are going to be the way forward, we also have to take with a huge grain of salt that these things are new and fresh. And there are going to be many, many years of exploitation. And people that are locking up, massive sums of money on these platforms, I mean, that is on them. That certainly is on them. As a trading group and as a trader, I have to deal with large amounts of cryptocurrency. And we could have gone a couple different ways, obviously, with suggesting how I could have gone a couple different ways with how I, as an individual, actually seek to grow my net asset value. Let's switch back over to the main scene and talk about this. There's a lot of different strategies that I could employ to grow my net asset value, right? And I've seen a lot of these because I do more than just cryptocurrency, right? I trade FOREX, I trade exchange traded funds, I trade contracts for difference, and I trade crypto. And that means that I'm very diversified, and that means that I have elements of cryptocurrency in my philosophy and in my portfolio and in my trading strategy. But it also means that I have traditional elements, and a lot of crypto-only specific traders or groups tend to be very ignorant of traditional markets or traditional approaches to things. Some aren't certainly, but many are. And I think that that is very risky. I think that that exposes you to too much potential downside. This is why, recently we did a community mentoring session last Wednesday, and one of our members asked, if I thought it was a good direction for somebody who was a crypto only trader to begin opening up and exploring other options and avenues. And I said, absolutely. Not only from an investment perspective, but also because, for example, right? Cryptocurrency is not the only exciting development going on right now. It certainly is avant-garde, at the front of the front. But to say that this is the only thing going on in the world, when that is blatantly not true, because look at all the issues that affect cryptocurrency, right? Obviously, COVID-19 and vaccine development and treatment is a huge developing area in industry. And prior to that, there were many technologies that people use on a day-to-day scale. The people who are deeply entrenched in cryptocurrency, you guys use planes, trains, automobiles, mobile devices, computers, cellular technology, 5G, every single day. And so to spurn investment or interest in these other things, and assume that this is the only thing going on, not only is short-sighted in my opinion, but it also from a diversification standpoint means no diversification, right? You can't just diversify in cryptocurrency. And I think here's the reality, right? If I may say so, this entire Ethereum DeFi and the constant hacks and the issues really go to show and strengthen my point that I think, in my opinion, this Ethereum decentralized finance approach and individuals putting lots and lots and lots of money, locking lots of money up on these systems, right? That has been an attempt for crypto-centric individuals, crypto-only individuals, to de-risk off or diversify their crypto holdings on-chain. And that has been very painful, to the tune of millions of dollars for a lot of these investors, right? So, things to consider, things to think about. All right, with that being said, if you guys have any questions or comments or concerns, please leave a comment in the section down below. Let us know what you think. Do you guys think that I'm being too harsh on decentralized finance? Again, I want to be very, very clear that I do think this is the future, but I think that individuals who are, and especially investors who are interacting with these systems, you can support a network's growth and help develop and encourage that system by throwing a couple $100s on there or a couple $1,000, not 2.4 million. All right. There are safer ways to protect your funds. With that being said, we are going to take a small break and convert the studio over to do today's market analysis. Let us know if you guys have any chart requests. We're going to start off with Bitcoin and the majors, Ethereum as well, EOS, LTC, XRP. Then we're going to get into Forex. We're going to look at traditional markets, see what the SPY and the ETFs are doing today, look at commodities, and we're going to take your questions live on the chart. We'll be right back, guys. Don't go anywhere. Hopefully you guys can hear me okay. Might have to boost my audio gain up a little bit. Got the split going on because obviously we're moving to the standing desk so I can utilize all my monitors, which I prefer when I'm doing my analysis. Let me know if I got to turn my gain up. I will turn my gain up about 5 dBs. Okay, that should be pretty good. All right, guys, so looking at the daily time frame, or excuse me, looking at the broader markets. We can see on the lower time frames, obviously Bitcoin's had somewhat of an interesting day today. All right, turn the audio up a little bit. Let's boost this by a few more dBs. Hopefully this doesn't compress my audio. You guys let me know. Tomorrow, for tomorrow's show, I will bring the regular mic over here, so we won't have the issues. But for today, just for the Monday, you guys will have to deal with the headset. I am in a helicopter because I identify as a TAC helicopter. All right, so anyways, on the day, we've got a lot of interesting occurrences here on Bitcoin. Opening up, fairly interesting. Opening up to a pretty opening up with a pretty steep sell-off, bottoming out of that on the lower time frame, so the pretty significant hammer formation, pulling up, forming a lower high, second plunge back down. We have formed our second higher low of the day. Meanwhile, let's go to the daily and see what the overall trend and where that is pushing us. All right, on the daily time frame. In relationship to the baseline, we just had another beautiful reversal baseline bounce trade setup. Big shout out to the traders that attempted to take that. As for myself, the only trade that we ended up taking when I got up this morning at 6, I came right to the charts. I saw price poised right before the decline. I entered into a short and took profit fairly quickly. So I had about a 45-minute trade, right? As soon as price spiked down significantly, ended up taking our profits. That's been my trade of the day. As regards Bitcoin, other than that, I am simply spot long. I have some long exposure on some USDT pairs as well, 2 of 3 of which have actually been stopped at a break even. So 50% profit on those, stopped at a break even. I have 1 trade open that needs to be managed today. The rest of my trades are still largely in FOREX, which are doing well, and then we'll be looking for new ETF and CFD trades as well as commodities here later on today. Here on the daily time frame, Bitcoin is riding above the daily baseline. As I said, it just wicked down, bounced right off of the daily baseline, and it's forming currently a daily doji. This is currently an indecision candle, and we have about 6 hours. We have about 5.5 hours, 6 hours until the daily candle closes. So if the daily candle were to close like this, from a candlestick analysis, there's not a whole lot of information here. A push back down into support and a doji is generally reminiscent of the fact, again, dojis are indecision candles. They indicate that the market, that buyers and sellers are about equal in strength. So this would not give us a whole lot of data. What it would say to me, however, is that those who are screaming for the bearish case right now aren't necessarily justified based off of daily structure. Because again, what did we just do? We drove down into support and have currently reversed off of it, meaning that price is about equal. That about bull and bear strength is about equal at this point in time. Now, should price descend a little bit further here and close below the daily baseline, of course. So if we were to get a close below 68.53, a close below 68.53 would certainly be setting the trend to bearish, and a daily close for me below 66.90 would be sending me into a full risk short at this point in time. Looking at Minx is just giving us the daily cross under this candle, which is telling us to stay flat on longs at this point in time. We do need now to wait, utilizing Minx as a trending indicator to look to take the trade to the upside. Those utilizing Minx as a line cross indicator, this might even be your indication to be looking for a speculative short. What you would be waiting for at this point in time is for price to actually be in the right area, that is below the baseline. Wadatar explosion is still throwing up positive volume delta. However, we are below the dead zone. There is not a lot happening here, and volume is not confirming the movement to the trade. Our confirmer, Paralox, our longer term, our smoother momentum oscillator, it's not really a momentum oscillator, it's a divergence detector, is indicating that we actually should be looking for shorts. So all of this adds up to mean that on the daily time frame, for those looking for daily swings, not only from candlestick analysis, but also from disagreement on our momentum indicators and our volume indicators, there is no daily swing trade here on the table. So as a daily swing trader, this is the time where I step on the sidelines and I wait for a clear objective signal from my system, from my strategy. All right. Looking at the meso timeframes, the meso trend on Bitcoin has actually flipped bearish, signified bearish on this previous 4-hour decline. You had a nice retreat, so this is almost a reversal of the baseline strategy. Price pulled right back to the qualifying line on the 4-hour time frame, in a sense sold off. So on the meso trend, on the meso timeframes, you do actually have indications to be shorting. Wadatar explosion did give you that signal right here. So the meso timeframes are trending to the downside actually now. And looking down at the 15-minute time frame here, it's been fairly interesting to trade. As we can see, utilizing Minx as a reversal indicator, I do have it optimized for the 15-minute time frame here on the ByBit perpetual contracts for Bitcoin. We did get a reversal signal. We got a short signal here and here, catching the tops fairly well. And then both time transformation and Minx pretty much DCAing into this dip right here. First buy here, pretty big plunge, buying on the second hammer candle, opportunity to take profit at today's point of control. Now, what's interesting about the lower time frames at the looking at today's volume by price signature is that we've put in this single print right here. Basically where price is currently right now. It's actually just a little bit below us, right about 69.86 on the ByBit chart. If we get closing below that level, then us recovering and actually bidding up today above today's point of control, which is sitting at about 70.75, starts to look unlikely. And it does look like on that daily perspective that we might not close like a doji, that we might actually get a more bearish close. Because where we're sitting right now, price plunged down, formed a single print. We pushed back up to the point of control to retest today's point of control. We sold off from that level, and we've established this, what we assume might be a support level at about 69.80, 69.90. That's the level that we are currently testing just this moment. If we don't actually bounce from this level and make it back above 70.75, today's daily point of control, then we're just going to continue to drift toward the downside, right? As you can see, we're actually getting what senior analyst Alex would call almost bottoming below zeros. We can see that on the Fisher. We see that on time transformation. We can see that on Minx as well, where our momentum oscillators have come back up to the median and crossed underneath them, which is often a signal of continuation of a trend. And as we can see on the current 15-minute candle, we are actually blowing past that level. We're actually coming down to test it right now. I have the green line here, but we can see that we've actually formed the single print here. So let's take some time and watch to see where this is going. All right. But if we do end up closing, I mean, this is a lot of bearish momentum. This is a lot of bearish selling. Damian, thanks so much for the subscription over there on YouTube, as well as Mariano. Thank you so much for the YouTube subs. But yeah, this is quite a lot of momentum. This is quite a lot of bearish momentum. So again, the intraday trade was to the downside. As I said, the trade that I took was right about over here. Right about over here is about 6 o'clock. Nah, it was later than that. Hold on, let me be more honest with myself. It was right here. This is what I sold into, catching this movement to the downside, and on this 15-minute hammer candle close, I ended up taking the trade, topping below zero. Yep, there he is, Alex Pearson right there. Topping below zero. So this is kind of a continuation pattern that he looks for. As we can see here on the 15-minute, we are getting bought up a little bit. So we do need probably another, I would say, 30 minutes. I'd like to see if we form a swing low, a higher swing low. Excuse me, not a higher swing low, but a higher low on this pattern and get back up above 70.75. Those would be the kind of trades that I'm watching for. Obviously, if we get back up to 71.75, which was our previous point of control, we consolidated at for quite a long time, basically all weekend, then that's okay. The reason why this is a little bit more bearish as well is if we look at the point of controls on Thursday and Friday, where price actually consolidated, not only did we sweep those levels, and a sweep would be okay. Like this movement right here is okay, and that's why the hope still remains for a bit of a double bottom here and a higher low before a push to the upside. But the reason why that becomes less likely is because we're actually trading and pushing down below the levels that we established on Thursday and Friday. Not good signs. Saturday and Sunday data, volume profile signature levels on Saturdays and Sundays can largely be ignored. And again, what junior analyst Fibonacci would say, what Shiv would say, is that the direction of Monday's daily candle is going to determine the way that the market moves the rest of the week. So if we do end up getting this negative bearish close, it's going to be kind of setting the tone for the rest of the week. It's going to be setting the tone for the rest of the week. And as I said, the daily is coming down. The daily is still at a point of indecision. It was at a point of indecision on Friday. It's at a point of indecision now, still today on Monday for daily swings. But looking at the lower time frames, we can begin to see a little bit of a hint that we might actually be looking at a Bloody Monday. It's not so far a Bloody Monday, but it is certainly a red Monday because we have not been able to establish a firm base of support and push up in a significant fashion. Again, the morning was kind of characterized by this plunge down and then this quick recovery rally, but we're right back down at the lows that we formed today as well. So this is currently looking bearish to me. That bearish bias will be negated if we can actually get back above 69.83 at this point in time, back above that single print, and more so if we can back above 70.75, 7100 to push price up. All right, Renko trend is also about to flip bearish as well. We had a bullish Renko trend pretty much since Thursday, even with the bips and bobs. But we haven't printed a bearish Renko candle, but the trend is potentially going to be flipping to the downside here on the Renko chart as well. Another thing that I wanted to look at, of course, was the Heikin-Ashi trend for the daily. And Heikin-Ashi trend has actually flipped bearish if we do end up closing. And again, same thing on the Heikin-Ashi. The trend is below the continuation filter, so closing back above that continuation filter, 72.35, is going to be pushing price to the upside, is going to be signaling continuation daily swing longs on Bitcoin. So far, that has not happened. Closing below 66.55 is going to be pushing price to the downside at this point in time. So we've got about a $300 range on either side of price. Nothing to do at this point in time. From the larger perspective of the daily time frame, Ethereum is going to be very similar. Again, looking at Ethereum with Japanese candlesticks, we are getting a take profit long signal on today's daily candle. We've yet to close back below the continuation filter. We still have a rising explosion level from WADA, and our confirmer parallax is still bullish. So actually, on its face, Ethereum does actually look far more bullish, but the reason for that is indicator lag as well. We have to understand this. The reason why is because Ethereum outperformed Bitcoin to the upside, didn't underperform Bitcoin to the upside, and is currently outperforming Bitcoin to the downside as well. So it's got more room to drop. Let's check the Heikin-Ashi trend while we are here. And the Heikin-Ashi trend, as we can see on Ethereum, hasn't flipped bearish yet. We're still strongly above that continuation filter for those using Heikin-Ashi as their trend indication system. Meso trend on the 4-hour time frame is also flipped bearish. We've had a bullish 4-hour trend since the 14th of April. So 1 week later, we have flipped into a 4-hour negative trend on the Meso time frames. Same thing here on the 15-minute time frame, breaking down from the point of control that we formed today. Today was characterized by a steep plunge down from the high that we formed. Again, attempting to form a higher low now. That hasn't happened yet. And again, we are trading below not only the point of control, but also the single print that we formed on the sell-off. So this is where buyers began stepping in. You can see volume by price. This is where the most significant buying occurred. We have this violent rejection down at about $173. It's a little bit higher than that. I'm going to say that's 170. What is that? Low is 173.25. I would have called it 173.10 just by eyeballing the chart. And so price currently for the bullish scenario needs to get back above 176.63 and certainly above 179, back above today's point of control to give us some good bullish bias. Blue box territory, good to see you as well, my friend. It is good to be back at the noon slot. Now, interestingly enough, the Renko trend for Ethereum is bearish, has been bearish actually for a minute. So those using Renko as their initiator is fine. And of course, Manx giving the cross under, parallax still bullish, Wadatar explosion, rising explosion level, but flipping pretty significantly here into bearish territory as well. So again, a lot, let me pose the query there. For those of you guys who are new to the channel, who don't understand pathways to profit trading methodology, the the long story short, with today's Bitcoin and Ethereum analysis, is that there's not a whole lot to do for daily swings. We're right at an indecision point. Another day or another 2 days is going to determine a fairly significant swing trade for Bitcoin. Potentially to the downside is the way that the charts are looking. The meso time frame, which means the intraday or intra-week timeframes, if we will. So the 4-hour time frame is what we use as our benchmark, is going ahead and signaling that the trend has flipped to the downside. The lower time frames, the scalping time frames, the intraday, the day traders time frames are signaling that the profitable trades have been today to the short side. That's where the momentum, that's where the velocity is coming on an intraday basis. Daily swing trades are not quite there yet. Daily swing trades are not quite there yet. So daily swing traders need to be on the sidelines right now, waiting for confirmation to take full risk shorts to the downside. Strike the profit, Scrooge. Good to see you, my brother. Anyways, meso time frame traders, so 4-hour to 2-hour time frame traders, I think need to wait for a more optimum entry. Lower time frame traders are right at the peak of another potential big movement. All right, getting on to the broader markets, let's look and see if we have any inspiration for this. Let's see what the SPY, let's see what the CME E-minis are doing today. And of course, we can kind of see the same thing. We're on the hourly time frames here for the SPY, for the ES, for the NQ, for the Dow, for the Russell, and we can see that their day has largely been characterized. Let's go see. Let's make sure that we get market open. So market opened on the on CME futures, and we pretty much pumped it to the upside. But over the last 2 hours have gotten some good momentum to the downside. Now, I would argue that the Bitcoin chart looks more bearish. This is obviously on a 10-minute delay, so we actually have gotten a little bit more sell-offs here on the ES futures. But I would argue that the Bitcoin chart looks more bearish than the traditional markets right now. Looking at the VIX, VIX is actually rising. It's been fairly choppy to trade. The euro is consolidating. Gold is actually sold off pretty significantly. Don't let the last 6-hour rally confuse you. Both silver and gold have had a pretty significant sell-off moving into last weekend and moving into today. But so far, what's interesting here is that we're seeing gold and silver rally over the last 6 to 7 hours, where we actually haven't seen that in Bitcoin. So there is some pretty significant decoupling in all of the markets right now, which is really interesting to watch. So Forex Meister, good to see you over there on Twitch. So my suggestion, my recommendation would be to evaluate every chart independently as we do with Pathways to Profit and not necessarily look for these correlations that we're so eager to find. All right, looking over at the actual ETFs, we can get some actual real nice, beautiful prices. Where's the SPY at right now? All right, SPY trading above the continuation filter. So things are still bullish on the SPY, even though we gap down, having a nice push to the upside. The NASDAQ, the QQQ, gap down as well, but trading up nicely. So is the Dow. If we look at the Dixie is consolidating after some serious downwards pressure. But if we look at the Dixie over here on the top right, we can actually see that we have formed, and I've got Quadrigo on, so ignore those green lines. But on the Dixie, we can actually see that we have formed a higher low. Now, overall, this looks like a symmetrical pattern to me. I'm not really biased one way or the other. We are struggling to get back above resistance. I think if we can get back above 99.90, like a strong close above 99.90, we can see that's the resistance level that we're currently dealing with right now. I would expect to see the dollar rise on strength a little bit. Let me think about this for a while, because I have to take my kind of fundamental bias into account when I think about the Dixie. You know, the Dixie is going to rise, the dollar index is going to rise when VIX is rising and when there's uncertainty in the marketplace. And it's going to take me, and I need to see how the markets perform over the next couple days to actually get a good beat on where I think the Dixie is going to go. So let's just note where it is from a technical perspective. It is at an important technical resistance level, and we'll come back. We'll come back and have a better understanding where we think it's going to go. Looking at gold spot, currently on the daily. Gold spot's going to be easy for us. Gold spot is in a no trade zone. We've got a reversal baseline bounce coming in right around the 1640s, 1630s, closing down below 1640.45 4 is where the reversal baseline bounce is going to be today. That's the area to target for a break to the downside. Getting back above 1725 to the upside is going to be a continuation long. So gold for us is going to be kind of in a no trade zone. We're on the sidelines with gold. We're at an indecision point where a lot of traders are going to hop into the market and get kind of clenched. And Bitcoin breaking down from that area that we just talked about, getting back over here to the lower time frames. Big push, big sell to the downside here. Yep, really sweeping the previous violent rejection completely. All right. Now those downside targets that I posted about earlier, that 67.96 and the 65.50 begin to look like realistic targets. So there we are. We blasted past that single print. Now we're down to fill that gap, that inefficiency at 67.96. If we end up tumbling below that, the only thing below us we have is that violent rejection at 65.50. All right, we got a lot of, let's take a gander here. We looked at gold spot. We looked at silver spot as well. T-notes consolidating, so I don't really have a lot of data about that. And I won't really have a strong opinion on the Dixie or T-notes here probably until Wednesday. I do kind of want to see how the markets respond because I'm not sold on whether or not we're in an equities dead cat bounce or, well, I am convinced, I'm pretty sold on the idea that equities are going to see lower prices, right? You can't, Fed printing, this kind of hyperinflation, or what they're doing with normalizing the market so that hyperinflation doesn't actually, so the money printing doesn't actually cause hyperinflation. I am fairly certain that we are going to see lower prices in the equities markets. It's certainly going to get worse before it gets better. You cannot rally a market around with you can't rally a market around just based off the strength of, I mean, listen, everybody is kind of upset at what the at Money Printer Go Burr, and they certainly should be. But there is obviously a reason why that is occurring. We have a health issue and an economic issue. Well, we have an economic issue caused by a health issue, right? Like you can evaluate both issues. You can evaluate the fact that the market was in an unhealthy place separately of the impact that the coronavirus has currently had on it. But I'm not going to have a firm opinion on whether or not this cat has more room to bounce until probably Wednesday or Thursday. I want to see a few more reports roll in, and I want to see overall how the market starts performing this week. Because, as I said, we're at a pretty significant indecision point right now. Pretty good turning area. That's why, again, I've been highly profitable the last few weeks trading the market into April, catching the movements to the upside, catching movements to the downside, both in Forex, ETFs, and it is, pretty good to be on point and catching the major movements this way. But if you keep pushing it, right? I don't want to push it, right? I'll tell you guys when I make a significant move. Right now, just trading the daily, looking at my daily swings. And as I said, looking at the majors, Bitcoin largely at a decision point. Obviously, some good volatility here on intraday. I'm happy with the movement that I made earlier, catching the downside trade. Let's see where we're at. No signals to do anything yet so far. Set for, well, time transformation called this pretty good. 2 candles, it would have appeared right here. Hidden bearish divergence. All right, with that being said, let's look at our Forex pairs today. And then we'll get into your guys' questions. The Aussie yen rising up. Oh, we got to get our baseline on here. Aussie yen rising up pretty well, no action to take. Be looking for that continuation above 68.876. The Aussie Kiwi is now in a no trade zone, breaking the bullish trend. Looks like we might get all the way down to 1.03, but of course, as we are in bullish territory, I would not be looking to short this. I would just be waiting to take action on it. The Aussie Canadian actually is pushing up a little bit from the continuation filter, following an exit signal. So that's a shame for those who exited. The Aussie CAD could have gotten more profit out, but if you took the trade as you should have, you can see some beautiful movement right there, and we never cry over the spilt milk at the last few dregs of a trade. Aussie dollar pushing back up. This looks like a little bit weak to me. We're forming a lower high, but we'll wait and see. It will be continuation above 0.63958, but right now nothing. The Canadian Swissy were rejecting from the continuation filter. I'd be looking for entries maybe to the long side below 0.68471 in the baseline. It's sitting at 0.67674, so not a whole lot there. The Canadian yen, same thing as the Canadian Swissy. Not a whole lot of action to take here. The Swissy yen, in my opinion, is actually bearish right now, and we're getting a rising explosion level for the first time on this recent cross under. So actually, the Swissy yen might be a short. However, one thing to note here is that this does slightly conflict with our 3-bar rule, because this would be like 4 or 5 trades, right? This would be like 4 or 5 bars after the initial daily signal, you know. The Euro Aussie, I'd be looking for a continuation short below 1.70305. The Euro CAD is in a no trade zone until we break down below 152 or until we break up above 156. The Euro Swissy, in my opinion, actually I am short on the Euro Swissy. I just had to double check. We have the green tag next to the chart. So the Euro Swissy signaled for a short about 3 days ago. Just waiting for this trade to play out. Euro Kiwi is actually going to be a continuation short on today's daily candle. So that one will actually go on the watch list. The Euro Pound has been a short, but is indicating to exit the short on today's daily candle. The Euro Yen, I am short on the Euro Yen, so nothing to do here. Just continue to hold this trade. The Euro Dollar is interesting. We're rejecting from the baseline. I am short on the Euro Dollar. Actually, this is one of the this trade that I have open is in a bit of drawdown right now, but I'm going to be looking for the rejection from the baseline here. This reversal baseline bounce. Plus, we have not gotten an objective exit signal, so we'll just be watching for this invalidation if we end up closing above 1.09075. The pound Kiwi, although bearish, closing below the baseline, we do actually need to close a little bit lower, below 2.05313 for the short on the pound Kiwi today. The pound Canadian is consolidating. I don't see anything here to do. Normally, I would be looking for a continuation long here, but our confirmer parallax is flipped bearish. And it's not a fresh signal anyways. Nothing to do on the pound Swissy, in my opinion. The pound yen, a lot of the pound pairs are winding up here, it seems, but again, I don't see any movements here to take. The pound dollar, nothing. The pound Aussie is going to be signaling for a fresh continuation short on today's daily candle. The Kiwi dollar is going to be signaling for a continuation long above 0.6668. Andy Ham says, what platform do I use to trade on? I trade on a Wanda. The Kiwi Canadian is going to be signaling for a continuation long today as well. Kiwi Swissy is going to be signaling for a continuation long. So getting some strength from the New Zealand dollar here today, as is the Kiwi yen. The Kiwi yen signaling for a long as well. The dollar yen consolidating, needed to close below 139.829 for a continuation short. The dollar Swissy, not much. Short on the dollar yen as well, nothing to do here. The Australian Swissy needs to close above 0.61811. The dollar won. I attempted a short on this, was able to pull some profit out, and now we're in a no trade situation. So that's largely it. The things that I saw that interested me were the Euro Kiwi, the Pound Aussie, the Kiwi CAD, the Kiwi Swissy, and the Kiwi Yen. So getting some strength from the Kiwi here today. And let's see how this plays out for the rest of the week. And then I am currently in positions on the Euro Swissy, the Euro Yen, the Euro Dollar, and the Dollar Yen. Now the Euro trades haven't been the most successful so far. They really haven't moved. So depending on the exit signals that we get, we might see us putting our eggs into the Kiwi baskets, right? Now, getting a lot of questions about oil. So let's look over and look at commodities right now. Let's look at our precious metals and commodities, and that'll be a nice little segue into oil. So let's look at our CFDs. Let's start off by looking at gold. Obviously, gold on the daily is in a no trade zone. We do need to get back above 1725 for a continuation long on gold, or looking for that reversal baseline bounce at 1644. Obviously, we've got kind of a ways to go. Down below 1618 is going to be putting us into a swing short on gold. Palladium's been on my watch list for a while. If we crack above 2235, I will be looking for this continuation long long on palladium. Not a whole lot to do today, though, in my opinion, unless we actually end up getting that volatility. Silver, right along with gold, has dropped down below the continuation filter, so that's a no trade zone for me. Getting back above 1561 is going to be good, a good sign for me. 61208 to be precise, looking at the tick size. But not a whole lot to do right now. And looking at platinum, of course, my love, my one and only platinum baby. No, it's palladium. You guys know I love palladium a little bit more than platinum. But looking at platinum, I don't see any activity to take, no action to take. Now, the Voss predictive filter is crossing up. I'm not using that as a continuation signal right now. I know that I've talked to a few people who are, but I don't really see anything to do. Closing below 766.626, going to put us back in a no trade zone, and then if we happen to cross back up above it, would be fine. Gold-silver ratio is still kind of dropping, but overall consolidating. Now, looking at Bentley crude. Now, I really wanted to see this back up at like $40. I wanted to see this back up at 40 before I saw it at 18. But is it possible we're going to see 18? Now, listen, naysayers here. I know this is going to be crazy. Crude, 0 cents. And let's see here. If we want to look at if we want to go right to the commodity, let me find. I don't know why people are hating on the USO, the USO so badly. I don't have the ARCA real time. Okay. And lagging. Awesome. Okay, let's get a refresh in here. Yeah, this is so what I'm looking at is the ETF for U.S. oil, right? And it actually looks not healthy. It's not unhealthy, but it's in a bullish trend. Closing below 315, which is a heck of a move, right? I'm not gonna lie. Like the spreads of these are big. We needed like a negative 20% move from USO. This is the ETF. This is for the more patient, ETF traders. Now, if we look at now, when I typically look at oil, I look at West Texas and I look at Bentley crude. Let's see here. We're just getting there. Yeah. So here's my Brent crude, my Bretton Woods crude. Bob, you are excited. Bob, so explain what's up to me. So your thesis is that crude oil is going to go to 18 cents, 8 cents, 8 pennies? There we go. Hmm. We got to turn on the news, guys. I mean, we have to turn the news on. Do you have any idea what Trump's going to say about this? This is going to be absolutely awesome. Zuhair Nakvi, thank you so much for the 20 Australian dollars, my brother. He says, I took the 12-hour baseline rejection short. Mean market entry, 7,000. Trading has been so much better since I got Minx and the CC baseline. Thank you so much for your work, dude. Thank you so much, man. I highly appreciate that. And Damian, thank you so much for the subscription over on YouTube. Let's go find live from the White House. Trump having an absolute seizure on oil. Well, listen, guys. I mean, I have never seen something trade at 0 cents before. That's crazy. I mean, I certainly have. I'm not gonna lie, guys. Anybody who can get their hands on this CFD right now should buy this CFD right now. Yeah, let's go look at the futures. Man, come on, TradingView. I don't have time to do this with you, man. No wonder TradingView is like messed up. I need the full FOREX Meister. Give me the full thing. Copy paste it from your TradingView. I need the exchange has to be in front of it in caps and colon. About to feel the wrath of God. TradingView is freaking broken, man. What's interesting is that this is futures. This is April's futures on yeah, that's pretty crazy, man. Well, last week we talked about OPEC slashing supply because there's just not enough places to stick it, man. I mean, this means that oil is trading in contango, man. Sean Bond, good to see you, man. Because oil is broken. Yeah. Well, okay, so there are ETF options. So I'm going to be pretty interested to see where the ETF ends up closing, because right now the ETF's trading at $3.99. Other options for ETF traders for Americans. Is going to be UCO. You can long gasoline with UpGas. You can short gasoline. Natural gas, DBO. DBO's more not. Here's the Brent ETF. That makes these the good plays. So I'll tell you guys what. I'm going to reserve judgment till I crunch the numbers this evening. Try to figure out what's the best swing, what's the best play on this. Not really the best direction. I would assume the direction would be up, but not necessarily immediately. You know, for an American, there's almost no way to capitalize on that April spread. And I'm not sure exactly the best way that one could capitalize. I'm not sure what the best way to capitalize if you're not American is. I would say, I mean, honestly, I would say buy. I mean, oil is not actually trading at a penny. You know, you make a great point, agency. Like, you know, oil is not trading at a penny, right? Like the April contract is trading for a penny. Do I think Tesla is a good play? Let's go look. No. We actually do stand to maybe get continuation push over here. Daily close below 721.93 on Tesla is certainly going to be pushing us into no trade zone. I mean, we had such a rapid expansion that the only plays for Tesla now become very high risk. Tesla has to be kicked into high risk because you only have two setups here. I don't have a continuation indicator that is going to be signaling continuation on Tesla. Which means either you have a system that isn't as restrictive a continuation system as mine, or B, so for example, maybe you're using a rune for your continuation, or maybe you're using a line cross indicator for your continuation, which means you just need to wait for one for a continuation signal. The second play for Tesla is going to be the reversal below continuation to the baseline type setup, right? Now on stocks, I don't use a baseline, but closing below 721.93, you know, you could set that soft stop for the daily close above 721.93 and try to take that short down to probably 600 at this point in time, or at least for the gap fill here, down around 650. Look what I missed out on if I did the show later in the day. You're right, Ricky T. Look what I missed out on. You guys would have missed out on me for like 15 minutes saying, I don't know how we can make money off of this. Just again, you know, which is, you know, I'm being a little sardonic, but sometimes there's huge movements in the market. There's not always an easy way to capitalize on it, right? It's a hell of a dump there, Crypto God. Couple hours late, bro. Let's see here. What do I think on real estate prices in cities for the next decade? Well, I'm certainly not an expert, but I'll put my speculation cap on. Hold on. Okay. All right, I got the speculation cap on. Okay, so listen. Equity prices are going to plunge down. Now, what's interesting about real estate specifically is that banks that have purchased a lot of mortgage-backed debt and have passed this mortgage-backed debt on to investors in the form of securities, right? They are actually setting aside money to cover defaults, right? If you look at J.P. Morgan, Goldman Sachs, and was it Bank of America? Wells Fargo, right? So J.P. Morgan, their profit took a 70% cut, and that's not just because of their actual loss of profit. It's because J.P. Morgan set aside $6.8 billion to cover losses that they are expecting in the future, and that's a huge step for them, right? Same thing. Goldman Sachs profits plunged 50% because they held an extra $1 billion to cover future loan defaults, and Wells Fargo evaporated $3 billion of their own profit to cover loss expectations. So that's actually a good thing. So that's more short term. In the short term, I wouldn't actually expect them to be rocked that much, but there is going to be increased supply for housing. I mean, a lot of people are going to lose their houses unless, here's the reality, right? We're going to have to almost speculate now politically, because the way that America is right now, which is more laissez-faire capitalism, and not, this goes back to like the argument that well, is Denmark and Norway or is Scandinavian style socialism good? Well, again, Denmark and Norway and Sweden, maybe I'm characterizing this wrong, but Scandinavian style socialism is really Scandinavian style capitalism with lots of social spending. And America is a huge step down from that as far as social spending goes, but we do spend dollar for dollar, we do spend a lot on our citizens. Not the same amount relative to other nations though, but in raw terms of absolute dollars, because we're a larger nation with larger per capita income and more GDP, we do actually spend larger numbers of dollars. So, back in the housing crisis, 2008, 2009, you guys remember, it's still going on to a certain extent to these days. Millions of Americans got evicted from households, right? And there were these big movements in local communities to re-put people back in homes. What's going to happen this time around? I would say that over the last decade, that the social sentiment in our country has shifted far more in favor of socialism. There is a lot of negative bias against corporatism and capitalism. There's just a lot of negativity towards some founding capitalistic values in our country, right? And not just among the citizenry, not just on Reddit, in our democratic, among our elected leaders in Congress, right? So the idea that, look what they're already trying to push for example, in the with this coronavirus stimulus, right? They're talking about giving couples and single individuals like $5,000 a month to prop up, individual people. And while that may or may not be a good thing, maybe that's obviously fantastic for people just trying to make ends meet. That's certainly fantastic. But the precedent that sets for universal basic income, or UBI, is pretty clear. And again, that's just going to depend on whether that's a good or a bad thing, depends on your political bias or your political agenda. But it's certainly easy to see that the groundwork is being laid for something like UBI to become implemented, which means if UBI is implemented, then what's to stop the government from stepping in and helping out hemorrhaging mortgage payments, or to help out with the housing crisis. So we have two conflicting things there. On one hand, just by looking at obvious ideas that the recession is going to put a lot of people out of jobs, having not a job is going to result in reduced income, or people are going to take lower paying jobs, so they're going to have reduced income. That is going to mean that there are more houses available on the market. That's going to be increased supply, and increased supply typically drives down prices. However, on the other hand, if the government steps in with policies, we know that rate controls and government intervention hikes prices up. On top of this, there's also market economics, right? So you have ticker symbols, right? So if we're denominating things in US dollars, right, you have the tradable asset or the appreciable asset on the left-hand side of the ticker and the quote currency on the right-hand side. For example, one good argument is that stock prices right now are rising not just because of buying, but they are rising because the denominator, the US dollar, is decreasing in value. So the stock is just stabilizing relative to the amount of dollars that have been printed, right? It's not just so much that the market is being bought back up. The value, the price, the dollar price of an asset can change by either people buying up the base currency or selling the base currency or the base pair, or by the quote currency increasing or decreasing in nominal value. And the dollar is certainly decreasing in nominal value because the quantity of dollars in production have been increased. And the Fed has to do that in conjunction with an actual slowdown of the economy, or else you get hyperinflation, right? They're trying to stave off hyperinflation as much as possible. So I don't really know. I mean, it just depends. I would say that it largely depends on the amount of government intervention in the housing, and I would say that it largely obviously depends on the broader economics of getting back to work. But my intuition would be in the short term to see falling housing, so in the very short term, I expect housing prices to go up to attempt to mitigate the low rates that are now available for consumers. Over the next 2 to 3 years, I would expect rates to go down. Over the next 5 to 10 years, as government intervention increases, I'd expect to see prices go back up. Zuhair Nakvi, thank you so much for the $20, my brother. He says, what's my view on FBTC weekly? I've made over 30% in Bitcoin appreciation selling at the daily minks take profit long. I'm looking to get back in. Would you consider the past few weeks as a flip to a weekly uptrend against Bitcoin? Well, Ethereum has certainly been strong against Bitcoin. Let's go look at the technicals. I'm going to have to, if it's not on my watch list, I mean, with oil doing its thing, we're going to be a little minimized in terms of what we can do. And I've got to be going here in just a few minutes, guys. But let's look at, we'll look at Binance margin, and we'll look at ETH-BTC. Where are you at? There it is, right in front of my face. All right, so let's just take it. Let's take it where I'm more comfortable with it on the daily. The daily trend has flipped to the upside, has been flipped to the upside since back over here on the 6th. So this is pretty good. What are we getting from? I'm not getting anything from the Minx exit signals right now. Parallax is bullish. The VOS predictive oscillator is about to cross to the underside, which is going to be a potential harbinger of reversal. But we are in a bullish trend. We're in a bullish trend above 0.24494. Closing back below that, we kind of get into that's your kind of confirmation to sell the top. Looking at the weekly on ETH Bitcoin. Looking on the weekly, this actually might be a trend flip to the upside. We might see Ethereum perform better. It's always difficult for me to say that because I feel that there's so much going on. But what you actually might be seeing is that people are speculating on the backs of these DeFi hacks, assuming that the value of Ethereum will go down, but simultaneously they're buying up Ethereum to be contrary, and contrary traders tend to be sort of successful. Depends on how strong they're. It's kind of like shorting the housing market in 2008. It sucks in the short term, but you know how it's going to end in the long term. Okay, so just from a purely objective technical perspective, right? Last week, or 2 weeks ago, signified the continuation long, right? Unfortunately, you didn't have parallax confirmation. You're going to be getting that on today's daily close. But there's a lot of room for error in here looking at ETH Bitcoin on the weekly, right? This thing stretches all the way down, and the only thing that we can do is we can switch this to 30. right? And if we switch this to 30, which lowers our margins a little bit, it actually puts us in bearish territory. We actually need now to close the weekly above 0.025631 rather than already being in an established bullish trend. All right, and I normally do set this to 30 for Bitcoin on the weekly. The only other thing that I would say is, looking more at the broader picture here, we are at historic lows, double bottom and a higher low. I would say that breaking 0.03 would be fairly significant, but maybe only up to 0.04. Doesn't necessarily mean we're going to pump all the way. We need the kind of the fundamentals and the technicals to be there as well. I don't have a strong opinion on Ethereum, Bitcoin on the weekly. I feel much more comfortable trading it on the daily. Trading Ethereum against Bitcoin is not really the long-term setup that I would look for. It's not really in my wheelhouse. Yeah, SPY is sliding, and I'm expecting that Bitcoin was a little bit of a canary in the coal mine for the SPY, looking at the futures. Yep. Meaning, again, depending on where we end up closing today, we've got a few hours before we want to be taking ETF trades. But looking at where we want to be closing today, I mean, we've got some work to do on the spider on our spiders before we actually end up getting short. There's Brent responding a little bit, Mr. Brent. There we go. Trade that CFD down, baby. All right, let's see. Let me pull open your guys' questions and see if I can answer any of those real quick before we get out of here. Oh, chest, of course. What am I thinking? Shout out to all the guys watching on DLive right now. Let's throw some lemons in this basket. All right. That's about all we got. I don't see any. Oh, did I distribute these rewards? Let's give these rewards away. Thank you so much, Sanic, for the lemon. You are welcome. Did US oil flatline? Dead. As I said, I'm going to look into that a little bit and think of what I can. I mean, listen, I don't really think there's a fantastic way to capitalize on the April contract. So I would recommend watching the CFDs that I prefer to watch, so Brent, West Texas, and also the ETFs that are associated, right? So you've got your ETFs that are associated with the oil markets as well, and seeing and looking for those plays. Maybe the best play is to try to short sell the ETF. ETFs can be difficult to short sell, right? It just depends on whether or not you can borrow them or not. Maybe USO, but the demand to short USO is probably going to be high. All right. Also, look forward to the. I'll tell you what, guys. We're going to take a quick break. We're going to do the outro. So don't go anywhere. There's some stuff I want to talk about. All right. And we're back. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I'm your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Thank you guys so much for joining me. I hope you guys go on to have a very safe day. Again, we talked about a lot today. We obviously talked about the significant DeFi hacks. We got to watch a U.S. oil contract melt down to less than a penny for a brief second, now flatlining at a penny again. Not exactly sure the best way that we can capitalize on this. The best thing that I would recommend doing if you're interested in trading oils is to watch the associated ETFs, to watch the associated CFDs, depending on what your nationality is. If you're an American, you're going to be watching the ETFs. If you are, or the futures contract. If you are non-American, you're probably going to be watching the CFDs because it doesn't make a whole lot of sense for you guys to trade American ETFs. The traditional markets and the futures seem to be slipping a little bit. However, I'm not fully convinced on that just yet. I'm not sure if this dead cat has more room to bounce. I'll have more conviction on that come Wednesday or Thursday. I want to see a few more days of market data. As I said, from a technical perspective, I am flat. And we're going to be seeing in which direction the market decides that it wants to move. We've pulled right down to the daily baseline on Bitcoin. Some very interesting technicals coming up. We're right at that flipping point where we might be opening up long-term swing shorts. We're right at that point where we might get continuation to the upside. My bias is a little bit to the downside, but I don't want to be the first to jump before I have conviction that the movement is going to be legitimate and convinced. Otherwise, definitely a lot of volatility in the Forex market. So regardless of whether you are, listen, so if you're watching oil and you're like, man, I don't know anything about traditional markets. I don't know anything about commodities. How would I trade these things? And if you don't know what to do in cryptocurrency, there's always something to do in Forex. There are so many uncorrelated asset pairs. It's a fantastic addition to cryptocurrency trading, as well as having long-term positions open in Bitcoin. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, slide those in the comment section down below. And while you're down there in the comment section, you will also notice the thumbs up button that you should punch right in its face and the subscription button to let you know you support the channel. You got to hit the bell icon, otherwise you won't be notified when we go live. And we are live every single day at 12 p.m. Central Standard Time, 1 p.m. on the Eastern Seaboard. Do your own calculations based on your own time zone, but we're every single day, as Ivan on Tech would say, like an atomic clock, breaking down the markets. If you guys are beginning your journey to trading and you guys would like to take advantage of our premium indicator suite, our signals and trade setups, our mastermind community, our community mentoring, our pathways to profit strategy creation course, our risk management material, the list really does go on and on with everything that you get. Check out all the benefits of membership over at premium.crackingcryptocurrency.com. That's premium.crackingcryptocurrency.com. Thank you to today's partners, Spectre Security Coin and X42, as well as today's sponsors. If you guys have any questions, there are links in the description down below to everything you could possibly need in life. Thank you to everybody watching on DLive and Twitch. Hit that follow button, guys. We will be back tomorrow at 12 p.m. Central Standard Time with another episode of Breaking Bitcoin Market Analysis. Make sure to stay tuned for this evening's Breaking Bitcoin Bits, or it might be an interview, and the interview with John Ehlers, private trader and engineer, is coming out later this week. So I look forward to debuting that for you guys as well. Until then, join us in the Discord, discord.crackingcryptocurrency.com. Trade safely, guys. I'll see you tomorrow.